My name is Andy Liu. I'm the president of IMS Health for Asia Pacific and China. It's a pleasure for me to be here today to speak on behalf of very distinguished colleagues here in the room today. What I want to try to cover today is talk about the pharmaceutical market opportunities. And what I decided to do is break it down into two parts. Okay? And again, I've got 20 minutes, so I'll try to cover as much as I can in 20 minutes. I want to first talk about the pharmaceutical industry from three perspectives: global, Asia Pacific, and China. Okay? And the reason why I want to do this is because oftentimes when you talk about the market, different people have different understanding about the size of the market, how big it is, where the opportunities are. So I thought it'd be good to kind of make sure that we're on the same page. And then the second is I'll kind of share 5 insights, and I'll get into that a little more when I get to that point. Okay? So with that, I'm always told that it's always great to start off a presentation by asking a question as a test. Okay, so here's the first test question. How big will the global pharmaceutical market be in 2015? Okay, so I'm not going to call in people, but just pick a number. I'll give you a few seconds. Pick a number in your head on what you think that number will be by 2015. You could share it with your colleagues if you want, or the people sitting next to you. All right? Got the number in your head? Okay. The size of the pharmaceutical market in 2015 globally will be 1 trillion, a little over 1 trillion. Okay? Now the question is not really how big that market is, $1 trillion. The key question is where and where does it come from? Okay? So again, a little bit of a busy chart, but I think this chart is very interesting. Let's start off with the US. Okay. In the US, again, you have CAGR here from 2011 to 2015. CAGR growth will somewhere be around 0 to 3%. And we're looking at a market somewhere between 345 to 375 billion. Okay. If we cross over to Central Europe, again, 0 to 6 to 9% with about 72 to 82 billion. Western Europe, again, CAGR is slower from 0 to 3%, somewhere around 200 billion. And then you have countries like Latin America, fast growth, around 82 billion. You have Japan here, around 110 to 140 billion. And then you have Middle East and Africa here. Now what's interesting is the number here, Asia Pacific. Asia Pacific is going to have a very strong 13 to 16% growth and is estimated to be about 225 billion, okay, by 2015. And again, it's interesting because this 225 billion, when you compare it to some of these key regions, is actually larger, okay? So again, just some numbers to make sure we're all on the same page. Now, what's also interesting is we teased out what I'll call emerging markets, okay? When you look at emerging markets, again, they're listed down here. The combined growth of the emerging markets continue to be very strong. And that emerging markets, when you look at it in totality, will be about 325 billion. So emerging markets compared to North America, become closer and closer, okay? So that's the first slide I wanted to show. Now, even despite of all this growth, we often hear from many of the news and our colleagues about how competitive and how challenging the pharmaceutical industry is going to be. And this remains true. But however, we need to keep in mind that the global pharmaceutical market, despite these challenges, fortunately will continue to grow in the mid-single digits. Okay? And so what you see in this chart is we divide it into 2 sections. Right? Here you see from 2006 to 2010, and here you have 2011 to 2015. And what you show is that in the past, the growth rates are roughly around 6% CAGR. In the outer years, it's going to slow down, but again, it's still growing. Okay? It's not flattening out and it's not declining. And what's interesting here is that, again, when you see these bars here, you see the growth rates have declined, but yet there's still growth. You see the orange bar here that's getting us to that $1 trillion mark. Okay? Now, many of you are very smart and looking at this chart now asking, okay, so if I take the numbers here from 2011, okay, all the way to 2015, and I take the absolute growth, in other words, add up these top bars, okay, the absolute growth from 2011 to 2015, how much is that? Okay? Again, you could see the numbers here. You could probably do a quick estimate. That number is 250 billion. Okay? So the absolute growth in the next few years will be 250 billion in up to 2015, okay? So the question is then, again, I'm kind of telling this page by page kind of as a story, right? The question there is then, where does that 250 billion come from, okay? Now this first chart, there's two charts I want to show you about where this 250 billion comes from. The first one is very interesting. It's a very simple mix. Again, you see the purple, the yellow, and the green. The purple here being developed markets and then emerging markets and the rest of the world, okay? So what trend do you see on this chart? Just looking at the colors, okay? You see how dominant the purple here is from 2002, 2008, and then you begin to see how dominant the yellow is in the outer years, okay? Again, we're talking about that 250 billion of absolute growth, okay? And so it's interesting because you do see a shift that where the value and where the revenues or size of the business is going to be coming from in the next few years, all right? Now, if I go one level deeper, this shows you within that emerging markets what exactly it's composed of, okay? So here in this chart, you see that 250 billion, and you see that here in Japan, it'll have about 8% share. You see in EU around 10%, North America around 10% with 24 billion, and then Latin America, Caribbean, et cetera, 19% with 44 billion, and then Asia Pacific as a total will have 31%, okay? And that gives you around 74 billion, okay? So again, this is really kind of setting the stage to let people know where the market is today, as well as where and how the market will continue to unfold in the next few years. And this is important because it begins to paint a framework when we talk about deal opportunities, where they're going to exist, and where areas you want to begin to think about, okay? So the next slide I have talks quickly about, so what's driving this growth in Asia Pacific, okay? And again, the one slide I thought that was quite interesting in this one here, and again, there's a lot of different ways to talk about growth in Asia Pacific, but this one I found to be quite interesting. So what this slide is essentially talking about is talking about the different ways to look at it. You have here, again, it's a busy slide, but you have here the nominal GDP growth, you have healthcare spend per capita, and you have a third attribute of urban population share, okay, just as an example, all right? And if I take China, because everyone's talking about China and the importance of China and how fast China will grow. When you talk about China, you see here that nominal GDP growth is 12.5%. And again, you can benchmark it with countries like, let's say, Australia, right? And then when you look at the healthcare spend per capita, it's at 169. Again, you compare it to Australia and you see the gap. When you look at the urban population share, in other words, healthcare in urban populations versus the rest of the country, you see that in China it's relatively low, whereas in Australia, obviously, it's very high, okay? So all these are indicators to talk about where the potential is and where the opportunities are going to be in some of these markets. And as you can see from some of these indicators, in the end here, we have a projection that the pharmaceutical market growth is going to be around 17.2% in China, okay? Obviously looking at several other factors as well. Now, if I were to take the opportunities in different countries that we just spoke about previously and plot them on a chart of both growth rates in the past as well as growth rates in the future, what does that look like? So here on the bottom, we have the CAGR from 2005 to 2010. Here we have CAGR from 2010 to 2015. So obviously, if you're high on this end, it shows that you had high growth in the past. And if you're high up here, it shows that you're going to continue to have high growth in the future. It's interesting to see the fastest country out here is actually Vietnam, right? Vietnam has shown that in the past it's growing very rapidly, and we project that it's going to continue to grow very rapidly in the future. But again, you need to also look at the size of the bubble, because the size of the bubble tells you how big that market is. So although it's sitting out here all by itself, which is great, the size of the bubble is not as big. China obviously is a big player, and then we have India here, and then we have some of the other countries, in different quadrants in the box. So again, just kind of a very quick, easy visual for you to see in terms of where each of these markets will stand, looking at both CAGR growth rates in the past and then CAGR growth rates in the future. Okay? Now, so with all this growth, there's obviously a lot of concerns as well, a lot of challenges in the marketplace when we talk about Asia Pacific, right? And what are some of those challenges and barriers? So I thought it was important to just show one or two slides about what's happening in the market as well. The first slide here is what I'll call the different challenges that Asia Pacific is going to face, right? And there's a very simple model here. What we have here is simply level of aggressiveness, okay, and frequency of use, okay? And these are essentially all the cost containment pressures that we often hear about, right? And so many of you have experience in Europe or US or here in Asia Pacific, but you hear about some of these things, and these things are going to be more and more common here in Asia Pacific. You hear about price cuts, right? Level of aggressiveness is high, and frequency of use is also high, right? Co-payments, and again, price volume caps. Here you have, something HTAs, health technology assessment, reference pricing systems, cost effectiveness. So there's a lot of different things that are being done. And again, I think in the previous panel, you heard the speakers talk about you can't look at Asia Pacific as kind of one because each one is different. And I'm going to touch on that specifically in a little bit later as well. Now, if I dive one level deeper into this slide, this is what I get, okay? And what I tried to do here was I tried to show the different regions, but then within the different regions of EU, APAC, and ASEAN, I've listed here the abbreviations for each of the countries, okay? Now, what's interesting about this slide is I'm essentially trying to show you the cost containment tools with decreasing complexity of the tool. Okay, so obviously price cuts is the fastest one to use and it's less complex. When you talk about risk sharing agreements, HTA, those become very complex, okay, and more difficult to implement, but equally as important. What's the trend? Again, I like to visualize and just see something and say, what trend do you see here, okay? And again, the trend you see is that here in ASEAN, you're beginning to see use of these type of tools. Okay, the less complex ones. Asia Pacific has migrated from not only use of these tools, less complex, but kind of in the middle tier. Europe, on the other hand, is up here. Okay, so just a very simple chart to show you where the migration of these tools being used and what should we begin to expect in Asia Pacific in the next few years. Okay? And I think that's a very important message because I think there are a lot of things that we can learn from our regional colleagues in other areas such as EU or such as the US. In ASEAN countries, we may be here now, but we need to ask ourselves, will we continue to be here in the next few years or will we migrate up? I think the answer is we will migrate up, but the question is when. It's not a matter of if, but a question of when. Okay? And again, all these things are going to factor into how big we think the opportunities are and how aggressively and what our assumptions about the size of the market and where the opportunities exist will be. Okay? So again, a lot of information in this slide, but very interesting because in one visual it can kind of show you where the evolution of these challenges and barriers will exist here in Asia Pacific. Okay? So with that, I think I've got 5 more minutes. I'll do one minute on each of the following slides. These are what I call 5 insights, okay? And the way I decided to do this chart was really, did you know? Okay, so we see a lot of presentations and people are telling you what the facts meant. But I decided to do a little differently today. I decided to position all these slides in a very simple question. Did you know? All right? You guys have to draw the conclusions. You guys are all experts as well, and you can take these away and share them with your team members and draw conclusions and make assumptions to what are the markets you want to go after, okay? So, the first one. Again, China being one of the most important markets, okay? If I were to take branded, traditional Chinese medicine, OTC, and generics, okay, and bunch them all together, okay? And then I were to take the branded RX market. How big is the branded RX market in terms of percentage of that whole pie? Okay, branded RX market in China in comparison to traditional Chinese medicine, OTC, generics, everything. Did you know that the branded RX market is only 3.3% of China's total market? Okay. Again, I'm not going to draw any conclusions. I'm sure a lot of you guys are asking a lot of questions right now, but I'm just going to keep it very simple. Did you know? Okay, and again, when you see this slide, it's very interesting, right? You've got here in purple, generics, here in red, TCM, traditional Chinese medicine, very, very big, right? You've got OTC here, 11%, and you've got branded, 3.3%, okay? What does that mean and what are the implications? We could spend a whole day on this, but I'll just stop at did you know, okay? Number two, if I look at patent and off-patent growth rates, again, I'm focusing on China because it's a big market for now. Patent and off-patent growth rates, which one's growing faster in China? And how fast is that growth? Well, did you know that both branded and off-branded products are both growing at double digits? Okay, now obviously the size is a little bit different because we see 25 billion RMB and 88 billion RMB, but again, off-patents at 12.7% and branded products at 18.9%. Okay, so both double-digit growth. Okay. Number three, we talk about reimbursed and non-reimbursed markets. Again, I think the panel discussed this earlier about the differences of the countries, and I think this one should shed some light on this as well. Again, the do you know is really between MNC and local companies, how should we look at reimbursed and the different markets, okay? And what we did here is we essentially looked at reimbursed, semi-reimbursed, and self-pay, okay? And we kind of compared multinational companies versus local companies. Again, just as a reference of two data points. Interesting to see that in Taiwan, where it's a reimbursed market, you've got very strong dominance by multinational companies and less so by local. And then yet when you look at self-pay markets like India, you've got strong dominance by local companies and less by multinationals. Okay, now there's several reasons about it, about the type of company, size of the market, et cetera. But it's very interesting because it's important to also look at not only the country, but then the type of market you're about to serve and what the implications will be for your markets when you're looking at growth opportunities, okay? Number four, key therapeutic classes. Did you know that in Asia Pacific, the top 10 therapeutic classes have over 50% market share? Okay, very interesting. So again, these are the top 10 therapeutic classes in Asia Pacific. And again, we're talking about infectious diseases, hypertension, oncology, dyslipidemia, psychology, diabetes, neurology, immunology, okay? All these therapeutic classes listed up here, when I look at the total here, this is 50% of the therapeutic class market share. Now, I took it one level deeper just to give you a quick view. This is China, this is Australia, Korea, India, so on. Very interesting to see that the therapeutic class dominance is also different. Again, it reflects the comments made by the previous panel. You know, not only is the reimbursement system different, but the dominance in therapeutic class is also different, which also is going to affect what areas that you want to go into. Okay, so again, you see here in China, very strong in infectious diseases, obviously in Australia, not as big. And again, there's obviously a lot of details within here as well that we can speak more about offline. But very interesting statistics when you look at the whole market as a whole, okay? Number five, I thought I'd throw in one about biosimilars because I think at every conference I've been in, everyone talks about biosimilars, so I just thought I'd throw this one in. Did you know that by 2020, patent loss of exclusivity will be 83 billion in biologics by 2020? Okay, and here's some numbers that show. Again, you've got some very big products like Avastin, you've got Remicade, Humira, and several other products from 2001 all the way down to 2020 in terms of loss of exclusivity. Okay, now the question here is going to be, with this loss of exclusivity, where will Asia Pacific play a role? Okay, and I think there's a lot of opportunities. The previous panel mentioned Korea. Korea is obviously a country that's very strong in biosimilars, but it'll be interesting to see who in Asia Pacific takes a lead role for biosimilars in the next few years. Okay, so what I'll do is I'll end my last presentation. Again, I know my time was actually cut a little short because of the time. I want to spend some time to talk about specific deal dynamics in the region, but as you know, deal dynamics, that would easily take a whole nother hour. If there's anyone who wants to have more information about some of the things I mentioned here today, or wants more information on the deal side, feel free to come. I'm more than happy to exchange business cards and we can talk about it offline. I'm currently based in, well, I say I'm based in Hong Kong, but I'm actually based on an airplane. My wife lives in Hong Kong, but I travel in the region quite a bit, from India to Shanghai to Hong Kong, Singapore. So hopefully we can meet up if you have additional questions. Now, the last slide I want to share with you is this: I started off with these 5 "Did you know?" Okay, I'll end the last one with what we do know. Okay, what we do know is that one of the largest markets in our region, China, by 2016 will obviously be a very dominant player in the market. I think many of you have seen this slide before, but China started out as number 9 in 2005 and quickly has moved up, and by 2016 we believe China will definitely be the number 2 in the market. If I were to throw Asia Pacific in here, this region will definitely be a very dominant player. Obviously, a lot of more challenges ahead of us, but again, more than happy to discuss these offline. We at IMS Health have been in this business for quite a while, and for me personally, I'm very interested to help this region grow. So look forward to partnering with all of you, and if there's any questions, feel free to reach me. Okay? Thank you very much.